Hey everyone, Bob Gavlik here with our third quarter market review from SurePath. And as usual, what I like to do is I like to send this out, but also like to walk through it with a little bit of commentary from me, just to make sure we focus on a few things that I think are important and pull those out for you guys. So as we look at this and as we work through kind of the standard stuff here, one of the things with this past quarter is that it was a positive quarter across the board. As you can see, everything's green. But the interesting part was that the best performing asset class was not US stocks, which it's been that for I don't know how long. It feels like US stocks are always outperforming. But actually, emerging market stocks did the best over this past quarter. And I think overall, this is a good thing because it's showing some recovery happening in emerging markets, which for a nice balanced portfolio strategy is going to be a positive. And the fact that some of these are starting to make a comeback relative to the US stock market. When we extrapolate this out over 1, 5, 10-year periods of time, you can see that just about everything is green with the exception of global real estate. I think one of the issues with real estate going forward and something interesting to think about is with the whole coronavirus pandemic and working from home and the advent of Zoom and all these different communication devices, maybe real estate isn't going to be like as important. Maybe that's what's priced in right here. Now, I think long term, they're going to figure it out because that's what real estate does. They figure out ways to use land and buildings and everything to their advantage. But I think that's part of the reason it's down so much over the past year. But what we can see is just about everything is up. And I love this page. I love this graphic here because even though we've had some unbelievable volatility over the past 12, 15 months, it shows that long term, if we stick to our investment strategies and maintain that long term focus, we're going to continue to put ourselves in a good place. And I know a lot of people have apprehension about the election coming up and what's going to happen in the short run. But again, if we can refocus and look at long term rates of returns across the board and understand that we're invested that way with a balanced approach, it's going to help hopefully just calm some nerves and make sure that we're prepared for the upcoming potential volatility with the election and all this other stuff going on. So I thought that was helpful. And as usual, I'm not going to walk through every page and read this to you guys, but I do like to highlight some of the things that I see that are important. And the next big thing I wanted to look at was from a US stocks perspective, it continues to be driven by large cap growth stocks, right? These are going to be the Apples, the Googles, the Facebooks, Microsofts, those sort of large growth technology companies. And we could see that value is pretty far behind when, on a relative basis when it comes to returns. And this has been a theme that we've seen consistently over the past few years. And if we skip down here to the bottom, kind of last commentary here where value versus growth, historically, the returns are on value side, but we've seen a lot of it recently on growth on their side of the balance sheet there. And the hope is, or the long-term view is that by maintaining a slight tilt towards value and not overcorrecting and try to get into the tech bubble or the tech growth that we've seen here over the past few years, it's going to be an important discipline side of things to just make sure that we're not trying to jump ship and move over to the growth side of things. So we're going to maintain that value perspective, even though growth has continued to outperform. And the last thing I wanted to touch on with you all is just the performance of different currencies relative to the US dollar. And what we've seen over the last quarter is just about every developed market has appreciated against the US dollar. And the majority of even some of the emerging market currencies have appreciated against the US dollar. And I think this is important because in the US, we have a lot of headwinds. And while the US dollar should continue to be the reserve currency, like the currency across the world, as the US dollar depreciates and other currencies appreciate, that helps our international investments and can help to kind of push us up for some additional returns in international. So again, looking at this, looking at some of the returns we've had in international and emerging markets here in the short run, continue to maintain that focus. And by the way, as always, maintaining a focus on diversification is going to be important not only for long-term returns, but also for reducing volatility during the periods of ups and downs. So we want to make sure we maintain that perspective as well. So as always, guys, I'd just like to run through this with you and give you some of my commentary. Feel free to reach out to me, reach out to your advisor, any member of the team if you have some additional thoughts, questions, comments, whatever you'd like. But thanks for stopping by. Thanks for watching, and hope to talk with you all soon. Enjoy the fourth quarter.